You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson from WallStreetWindow.com. Welcome to the show, Mike.
Oh, thanks for having me. It's great to talk with you.
Boy, a pretty interesting first 2 weeks of the year on the markets.
Yeah, it definitely is. I mean, we've spoken a lot over the past year, and, throughout last year, I was warning about signs that we were about to start a bear market, or actually by September I was saying we were in one, and it had topped in July essentially, but we did get that big rally in October that excited people, but now that rally is a real distant memory. And the crazy thing is, going into this year, the S&P 500 had a support level in the 1990-2000 area. That's where the low of December was, and that technical area also represent about a third retracement of the low in August and the high in October. So that's often a logical area for a pullback. And the year started, we went right through that level as if it didn't exist. And now that level seems so far away, and it is extremely far away. I don't know when we'll ever see it again, frankly. So that's kind of what the type of thing that's happened. That we came into this year above this key support level, and we went right through it. And now that support level, it would be a dream to get through it, back up to it. In fact, that's what a lot of people want right now, is some sort of bounce or rally to get out of the stock market. And everyone is looking for a bounce or rally because we've fallen so much. The market is oversold by just about any momentum indicator you can use. So that's what everyone's looking for.
Well, Mike, you were the first one to say to me, gee, while everybody's looking at the North American markets continuing to climb, you know that the value isn't there. Perhaps you should be looking at other stock markets that have already had massive corrections, say Russia or Greece. How has that worked out? Well,
at this point, I mean, those markets are been going down too this year. The Russian stock market does have still a very extremely low valuation, but it's gotten caught up too in a pullback that seems to be taking place all over the world. Actually, one of the most disconcerting things that I've seen this year is that the Baltic Dry Index, which is the rate that shipping companies charge each other or charge to haul freight, has fallen and collapsed in just a few weeks, down below where it was in 2008. What that means that the global economy is really slowing down almost to a halt. Now, I'm sure when I say this, people are immediately going to think, well, that's because of China. And that could be the case. But in 2008, in August, the Baltic Dry Index did this, and then a month later, the economy in the United States slowed down so much, it was practically seemed to be overnight. In fact, I have a friend of mine that I was playing golf with in the middle of September 2008, the second or third week, and he goes to auto auctions and buys cars, and used cars, and sells them. And he told me he went to this auto auction, one of the largest in the region, and no one was buying anything, and he had never seen anything like that happen. And he talked to other people there that have been doing this for decades, and they never seen anything like it. And he was frightened because this had happened overnight. And I'm afraid that we're facing a situation like that again, where there's slowdown going on overseas already, with signs of it, and it's going to spread to the United States. And another thing that is also disconcerting that also happened in August 2008 is there was a pullback in commodities. We all know oil has been dropping, but oil went below $30 this month, and other commodities also fell to a new low last week, which frankly surprised me. I'm someone that's been bullish on commodities, for the most part. Not on oil, but on the others I was. Agriculture commodities, coffee, wheat, and so forth, because they had, on the charts, they'd formed wonderful bases. They had a consolidation zone where they could have broken out and just taken off. And the commercial short interest was either extremely low or they were even long, still are long in some of these things, which they tend to be right. But these commodities actually broke down last week, which instead of breaking out, so I was wrong on that, and I had a long position I had to sell because it wasn't acting the way I expected. Now, what's concerning about that is the same thing happened in August 2008. A lot of commodities turned down that month ahead of the U.S. economy slowing down. And, of course, the stock market went into a death spiral in September, October of that year. Now, another comparison is if you go back to the year 2000, the U.S. economy also slowed down just about overnight. We had, of course, the NASDAQ bubble and all that going on going into March and April 2000. The stock market topped out, and but the economy didn't really slow down until September, and once again it slowed down overnight. When the GDP numbers were released for that quarter, they showed that capital investment spending went negative. It just went below zero. And during that boom of the late 90s, that's what was fueling it, was investment in computers, the internet, optic fibers, and all this kind of business. And it all ended. And it was, some of these companies were, they were just created because of this bubble, and they were using easy money and raising money in the stock market to create all these things. And so many of the internet companies went bankrupt, and companies like JDS Uniphase, and there's, hundreds of them just, went to nothing. Well, this time we've also had a boom fueled by the low interest rates, corporate debt being issued to take advantage of low interest rates. And the oil fracking boom is simply the most visible example of this, but another example, which actually impacted investors a lot more than what happened with the oil fracking thing, is that so many companies used the low interest rates to raise money by issuing bonds and debt instruments, then turned around and used that money to buy stocks and help make the stock market go up, and that's really what fueled the rally of 2013 and 2014. So now here we are, where it appears that the U.S. economy could be slowing down overnight at some point, I would say, between the next 3 to 12 weeks. And just like it did in September 2000 or September 2008, and both those coincided with vicious declines in the stock market. Now, they also were preceded by tops that already were put in place months before. So the stock market topped out in March of 2000, and you're talking like 6 months later, you hit September and everything fell to pieces. And now, it appears we topped out in July, and here we are almost 6 months later, ready to tip over. So it's tough. These kind of markets are markets where people lose a lot of money, and I think people really need to be aware of that and be extremely cautious and have cash positions of some sort or another to be able to buy at cheaper prices and make sure you're very well diversified. And if you want to make money, only buy things that are going to benefit from the eventual mess this is all going to create, and also bet against stocks, bet against the stock market. Everyone thinks it's going to bounce, but I hope it does, but it may not bounce that much. I don't think we're going to get back up to that 1990 support level in the S&P 500 for a very long time.
Well, I've been told in a situation like this, there's going to be a lot of false bottoms and tops, and that's where people really can get trapped.
Oh, yeah. Well, one other thing I'd like to add about that, me and most of the listeners, I'm sure, because you have lots of Canadian listeners, I've been trading gold stocks since 2002. We've had this horrible bear market in them, and I've seen many times that gold stocks have gone up 10% or something since 2011, and I've been fooled a few times thinking that they've bottomed. The commodities thing has fooled me going into this year, and that's what happens. But I think one thing, too, that is interesting about, or I think, I'm not sure if interesting is the right word, but it really needs to be pointed out, is just about every single bear market we've seen in anything since that 2008, 2009 bear market has gone straight down for a very long time. You mentioned earlier Russia and Greece. Those bear markets basically have lasted for years. Now, the gold and commodities bear market, and I don't really think gold's going to fall, or even commodities are going to fall much more. They've fallen so much for the past several years, but the important thing about them is that it's gone on for so long, and oil has gone on now for 2 years, the oil bear market, and oil stocks have fallen for 2 years. Now, what's happened in these bear markets is the rallies that happen, and almost all of them really don't amount to anything when they do happen. And it's like a straight down just grind that just devastates people that are fully invested in these things. So, and it's also taking place with individual stocks inside the stock market. We're all, captivated by the Dow and S&P 500 and NASDAQ, and look at them and so forth. But if you look at individual stocks, many of them have just been going straight down for 2 years. You can look at Caterpillar, IBM, Walmart. These stocks I'm just naming 3 of them, but you can look at 1,000 like this. And that seems to be the character of bear markets now, and I think that's what is starting in the stock market. It's amazing that the stock market has fallen as much as it has without any real bounce at all. I've never seen the U.S. stock market trade like this, and you've got to go all the way back to about 1998 to see a drop that went on for a couple months without any real bounces in the U.S. stock market. I mean, I've seen, like I said, gold trade like this, commodities trade like this, Russia trade like this, on and on, and markets all over the world, on and on and on. And here we are starting that type of bear market from the way the action is. So, I mean, you just look at today, the market gapped up 150 points, went in the red, and then finished green a little bit. And that kind of action keeps the people that are bullish on the U.S. stock market or don't want to face the reality of what's going on from selling or believing that it can bottom soon. And so I think this is just going to go on for a very long time.
Were all these central banks who came up with quantitative easing essentially just using very expensive toothpicks to prop up an overturned cement truck?
Well, this is a big thing because even though, like I said, we've been talking for a long time, I got bearish on the stock market in the summer and really warning people. Even me, I haven't fully understood what was going on. And everyone knows the Fed helped make the stock market go up through quantitative easing. But I didn't really understand until maybe a month ago how that happened. What did it do? What did it exactly do that made the market go up? And what it did is very simple, but people don't understand the gravity of this. By buying the Treasury bonds in 2012 and 2013, they caused interest rates to decline for mortgages, but also in the corporate bond market, the junk debt market. And the yields for those corporate junk bonds went to the lowest they've ever been. And the statistics are that starting in 2013, when this happened, they just went crazy borrowing money, and they use this money not to grow their businesses, not to increase their revenues, but to buy back stock off the stock exchange and make the stocks go up. So, and that's unsustainable, and it's probably ended already this year. It's probably ended overnight. And these companies, so much of corporate America is going to be in trouble because of this. Now, you hear statistics that say something like there's all this cash on the corporate balance sheets, so everything's fine. And they'll say they've got like $1.5 trillion in cash, so everything's great. And what I'm saying, they don't even know it. But what they don't say, or they don't know when they say this on CNBC, is all this over $1 trillion in cash. The vast majority of it's being held by only 4 companies. It's Apple, Disney, not Disney. It's Apple, Microsoft, and 2 other big cap ones that elude my mind at the moment.
Probably Google and Amazon, the FANGs.
That own all this cash, and many stocks have all they've done is increase their debt load geometrically over the past 4 years. And this is what is the problem with the stock market that no one wants to talk about, or no one really realizes, and I didn't realize it myself until just a few weeks ago. And I think to give you one example of how this works, Sirius Radio makes about $500 million in revenue a year, and they did a $2.5 billion stock buyback in 2014. They bought back 5 times as much money in stock as they make in revenue, and in order to finance that, they just issued bonds. So that company's so heavily in debt from doing this. It's just a disaster, and it's not the only one. It's hundreds like this, and then you have ones that they may not be in a dire financial situation or heading towards one, but they've done this too, and they're just going to have to cut their expenses. It's all over. I mean, it's ending. That's the way to put it, and I don't know what the end game of this is down the road in the next couple of years, but I do know that this is going to cause the stock market to decline. At some point, the Fed will probably do something, but I don't see what they can do. And the commodities are weak now, but one result, at some point, we're going to see gold just go totally crazy. It's probably going to hold up. The price of gold will probably hold up against the stock market for the next couple of weeks or months, but at some point, it's just going to go nuts as a result of this, because this is just going to be a disaster.
I was going to say Sirius. Whatever the numbers are here for Howard Stern's contract, 400 million, 500 million, whatever it is, he gets paid a lot of money, and basically whatever Sirius Radio raises up in cash, I think it's going directly into Howard Stern's pocket.
Well, I told this, I don't really follow him or I don't listen to that station or whatever you call it.
If you like lesbians, you'd like Howard Stern.
Well,
yeah, that's basically his show.
Well, I don't dislike them, but they don't have much to do with me, the lesbians, so I don't know.
Well, I was going to say
look at them. What is this?
Yeah. Well, basically, you just want to know how much money are they investing and where are they putting their investments. A question I was sent, Mike, if the U.S. dollar is known as the petrodollar, how come it keeps increasing in value while the price of oil goes down?
Well, it's not really it's gone up for the past couple of years, but I don't really think there's huge upside to the U.S. dollar. In fact, one thing that has started this year, which is really interesting, is that the yen is starting to go up. You can look at the ETF FXY, and it's going up against the dollar. It tends to do that when when you run into more bearish financial conditions, because there's been this trade of people shorting the yen to buy the U.S. stock market, and it looks like that's starting to get unwound. But the dollar, just to me, already had its run and it's floating around. That's ultimately that's something that's going to, the reason I said gold is going to go up at some point is because as we came into this year, the Federal Reserve said it was going to raise rates 4 times. Well, I don't know how that's going to happen. And once the Fed starts talking about we're not going to do that, that's going to be bearish for the dollar and bullish for gold. And as the stock market continues to decline, at some point they'll talk about, well, if we have to, we'll do another quantitative easing or some new program. I don't know what it would be, but I don't really think they're going to do anything anytime soon, but they would probably talk about, well, we could down the road or something, and that's I just don't think that's going to be bullish for the dollar. So if the dollar does go up, you have to ask the reason why that would happen, and yeah, I think at this point you'd have to go back to 2008 because there was a big spike in the dollar in October, November during the financial crisis that actually proved to be temporary, and it was linked to what was happening, with the banks and all that. And I don't really think heading for something like that. I compare, my thinking is what we're headed for is something more like the previous bear market, the 2000 to 2003 bear market, where the stock market went down for a couple of years. I don't think the rallies will be as strong as they were in that bear market, but that bear market in the fall of 2000, as everything started falling apart, a couple months into that, before the end of the year, gold made a major bottom and turned up, and the mining stocks did the same. So that's more what I'm looking for. And the dollar was weak in that bear market also.
Of course, in Canada, the reason we look at the U.S. dollar with some jealousy is that the Canadian buck has fallen down to 68 cents American.
Yeah, and can't explain why that is. I don't know.
Well, the Canadian dollar is closely tied to the price of oil, and the view from around the world is if our oil is worthless, then so is your currency. And of course, there's a lot more to Canada than oil, although apart from our banks and oil and gas, you'd be hard pressed to name somebody else who was bigger. Yeah. Well, the thing about oil is that even the price of oil has fallen since 2014. It went below $30 the other day, but I do think it can fall more. I don't really think it's done falling, but with that, how low is it going to go? I don't really, say it went to 25 or something. I don't know. It's not going to go to 10. Oil can only fall so much. So at some point that's going to, I would think that would be positive for the Canadian dollar. I'm more worried not so much about the price of oil, but the oil stocks themselves, because I think a lot of them are just going to go bankrupt, and many of them, most of them, all of them, really haven't even cut their dividends yet. So the oil companies are going to be in trouble. Now, that doesn't mean Exxon and these giant ones are going out of business or something, but they've got to cut their dividends and reduce their earnings estimates, and they haven't even done that. Well, I thought the first big sign of trouble in oil was when massive Shell decided to pull out of their $7 billion already spent investment in Arctic oil exploration.
Oh, yeah. I guess they need to do it now. Well, something crazy about it, though, is I looked at Exxon, and again, this sums up everything. In 2013 and 2014, the price of oil didn't go up, but the oil stocks continued higher, substantially higher. Now, no one said why. No one asked themselves, why are my oil stocks going up when the price of oil isn't? And it did it for 2 years. And the reason why is, I'll use Exxon as an example. They did the same thing. They issued junk bonds, and they bought over $30 billion worth of stock in those 2 years. It's a lot of money. Now, they're not, Exxon still makes so much money. They're not going bankrupt or anything like that, but they bought over $30 billion worth of stock in those 2 years, and many of the other oil companies, the majors, did the same thing. So that's why they went up, and that's not going to happen this year. They've already stopped their buybacks. Now, the rest of the stock market is going to do the same this year. So it's amazing where we are, and this is, it's funny. And this was Martin Luther King weekend in the United States. The market was closed, and 8 years ago, it was January 2008, and our market was closed on Martin Luther King Day, and it's a day I'll never forget because the markets in Europe crashed, and the Dow was set to open down 1,000 points, and I was long for a trade. And I thought the market could crash, but the Fed came in and lowered rates by 75 points before the trading opened and made it go back up. So I sold out. But why I relate that to today is because that made me wake up And I spent like 2 weeks just reading articles trying to figure out what was really wrong with the stock market. And I found articles that laid it all out, that the balance sheets for the banks were all screwed up, that 10% of their assets were in worthless subprime securities. So I was able to wake up and know something was wrong and dig to find out. And that's what people need to be doing now. They need to wake up and ask themselves, what's wrong with the stock market? And look up these things I'm talking about for themselves. Because just listening to someone say stuff like this, isn't going to convince you of anything. You got to go and find out for yourself. I mean, there's a lot you can turn on shows and hear, people say whatever, but you've got to do the digging yourself and look at some of these stocks. Go to Yahoo Finance and look at Sirius Radio and look what they've done to their balance sheet over the past couple of years. Go look up Apple and see what the insiders are doing on Apple. Go look up Darden Restaurants and see the massive insider selling on that stock that's taken place the past 2 weeks. In the fourth quarter of last year, we saw the fourth most insider selling in a single quarter in the stock market ever. Go look that up and ask why. Yeah, I mean, this is where we are. This is how we're starting this year. So I don't know what else to say.
Well, Mike, it sounds very much like it's always been do your research before you do your investments. And this time around, you have to triple those efforts, quadruple them. And even that in a poor market may not help.
Yeah, well, most of the time when someone says go do your research, they're basically saying, I've got a stock pick, but go do your research. I'm not responsible for what the outcome is. Go do your research. What I'm trying to say is this is more than just, go look up a stock. I mean, we've had two bear markets that were pretty amazing in the time I've started out, since the 90s, since I've been in the stock market. And the last bear market really wiped out a lot of people, and they never got back in. And those that stayed in, for the most part, today, they're over 65 years old. The young people don't have much money in the stock market to speak of. So most of the people in the market really aren't in a position to go through a bear market that could last 2 or 3 years. And who knows, there's no guarantee how long it will take for it to go back up to make a new high. I mean, you look at what's happened with the gold stocks since 2011. I mean, we're really 2012 was when they started bear market, and those highs are 6 years away now. Now, let me think, 4 years away. They're 4 years away now, and I do think they'll turn around and make new highs quickly. Not months, but when they do turn around, I don't think it'll take 6 or 4 years for that matter. But if you say it took 2 years, if we go from 2012 to today and add 2 more years, you're talking 6 years from that peak. And who knows? The stock market could go into bear market this year and not make a new high for 6 years. There's no guarantee that it's going to do it as quickly as it did before. And people who are in their 70s, they really don't need to go through something like that. Just don't. I mean, no one really does, but especially if you're up in years. So I think it's imperative for people to have some sort of cash position, have some sort of gold, because that can go up as a result of this mess that will come from all this. And they need to be really diversified, and they can't be fully invested in the stock market, which is how most people are in the United States. So when I say these things, that's what I've got in mind. And people I know, that's what they do, and they don't really. They don't really do anything else.
Mike, thanks a lot for chatting with us.
Thank you. It's good talking with you.
My guest has been Mike Swanson from WallStreetWindow.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Check out our very popular YouTube channel, Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.